Hi, it's December 20th. This is the BAM Weekly Muni Market Update, our last one for the 2024 calendar year. I'm Mike Stanton. He's Grant Dewey, head of BAM's Municipal Capital Markets Desk. Grant, thanks for taking some time at the end of the year.
Thanks, Mike.
So as we get ready to turn the page to 2025, it seems like the markets are experiencing as much economic uncertainty as they've seen really in weeks, if not months. How did that play out this week?
Yeah, I mean, for what's often a pretty quiet pre-holiday week, we had there was plenty of volatility. As the fixed income market faced kind of a host of new challenges or headwinds. We had started last week with stronger than expected inflation data. Both CPI and PPI came in slightly higher than expected. And then you also had policy implications. People are shifting through that, both for munis and just for inflation generally with the new administration. And finally, the FOMC meeting this week, where we saw the 25 basis point cut that was widely expected. But the comments, I think, were interpreted as a little bit more hawkish than people thought. And so we've had kind of 2 weeks of, really a change in sentiment. As a result, 30-year Treasury rates are higher by 25 basis points last week, another 10 basis points this week, back to a 470. And really over that period, AAA muni benchmark yields are off by 42 basis points, so have underperformed. And I think that's simply because we've had a fair amount of issuance to sift through here in the first part of December, especially given the negative sentiment, and we've also had now 2 weeks of redemption. So I think portfolio managers will look at that potentially as like the early signs of a redemption cycle, and they do tend to come in waves. So definitely challenging period for muni prices.
On the other hand, this morning's latest breaking economic news, the PCE inflation data, which is the Fed's preferred measure of inflation, that came in a little softer than expected. So maybe it is still a mixed picture, not as bad as some investors thought earlier, and then bonds are rallying a bit this morning on that.
Yeah, I mean, I think that's why we see the volatility. There really are two camps. There's still the 2% GDP growth camp for next year, where we'll see 3 rate cuts or more. The Fed was kind of telegraphing 2, and so we're in this period where there isn't a general consensus around the direction of rates, and so that's why we get these markets.
And back to your point about the supply and demand dynamics inside the muni market, typically January is a seller's market. There's typically relatively low supply, relatively heavy demand from investors who are getting a lot of principal and income payments coming in on January 1st. They need to reinvest that money. We're starting to see, I know in the BAM Public Finance Department, a steady stream of transactions, and even some larger transactions, $100 million plus, coming in with scheduled January dates. So issuers may be catching on to the calendar timing and getting ready to tap into that investor demand from the reinvestment money. So we'll see how that plays out in the next couple of weeks.
Absolutely, and I mean, I think we're going to come up short of the $500 billion in issuance this year, but there seems to be a growing chorus of public finance bankers and brokerage firms. I think will be at $500 billion next year. So,
and a couple of loud voices or notable voices out there talking about that it could even be substantially higher, depending on how tax reform talks go. If there's a move to severely restrict the access to tax-exempt bonds from municipal bond issuers, that could bring more transactions forward into the 2025 calendar year and even drive supply further.
Absolutely, a lot of different scenarios could unfold. So, a very interesting week, and thank you, Mike. We'll have next week. I think will be really no activity.
That's right. Yeah, the calendars look very slim. We'll wrap up the weekly update for now. We'll be back on January 10th. Thanks for watching. Have a great holiday and New Year.
Great. Thanks, everybody.